deep dive this morning. I want to say welcome to everybody who's joining us. This will actually be the last deep dive we do this year, as the next couple of Mondays will be the Christmas holiday observed and the New Year holiday observed. So welcome everybody to the last deep dive on December 19th this morning. So as always, as you join, let us know where you're watching from. It's so good to see everybody from across the country that starts their week, joins the deep dive, where we talk about what's most important in real estate right now. If you saw the video, I'm going to be talking about some of the things that I would have on my phone right now, maybe on an iPad, as I am out and about interacting with people over the next few weeks, because no doubt a lot of conversations will be around how is the real estate market? How's the market? What's going on? I read this or I saw this. And maybe some concern, a lot of concern out there. We'll talk about a new lending tree study that came out about consumers and what they think. But I'm going to give you a few visuals that really help to show where this market is at right now. And we'll talk about at the end, maybe if you want to hang on, I'll talk about where I think this market is heading. So as always, let us know where you are watching from. I'll follow along here, try to get connected if I can. And follow along with everybody on. Let us know where you are watching from. So I cannot get it going here. There we go. All right, I am getting it going. So let's see. Jennifer there in Michigan, great to have you. Daniel, see you there. Dawn in St. Petersburg, great to see you. Anthony in Scottsdale, great to have you on. So many folks that have joined the deep dive. It feels like since we started doing this and getting going, so many people watch it after the fact on YouTube or on other channels, but so good to see folks from all over the country. Rick there in Sarasota. Daniel, great to see you on Long Island. So many folks all over the country. This is going to be a deep dive that I would encourage you to maybe tag somebody or share it with somebody that you work with in your office, maybe your team, because we're going to talk about a few things that are coming out right now. Again, this will be the last deep dive of the year, but a couple of points that you're going to want to have handy as you're interacting with people over the next few weeks and holiday parties and things like that, where we'll see more and more people maybe that we haven't seen in quite a while. So many people joining. We're going to get started here in just a minute. Want to give them time to get on the deep dive, but I'll share my screen in just a minute. We're going to talk about a lending tree study, and then I'm going to give you the slides I believe you need to have on your phone or your iPad or somewhere handy as we have conversations about where this market is at. So I'm going to share my screen. We'll get started here right now, and I'll start off with this lending tree study, and it's all about market crash. And this came out, and I think there's some very interesting information we want to pay attention to right now. 41% of Americans believe the housing market will crash in the next 12 months. So really what that means is if you're with five other people, two of those people believe the market is going to crash. So we have a job to do. We still have a job to do to get the message out there. 72% believe the crash will be as bad or worse than 2008. Think about that. Of those that think that, the majority of them, overwhelming majority, think it'll be as bad as 2008. 58% expect the housing crash next year, and they're postponing buying, selling, or some other housing-related change. Now, one thing that I would be very aware of right now, and I think it happens to all of us, it certainly happens to us here at KCM, and it's the curse of knowledge. And that is when we assume that someone else knows what we know, or that I've said that. We've talked about housing crash, gosh, for the last couple of years, even coming out of COVID. And if we think, well, I've said that, or I've talked about that, so everybody knows it, gosh, we're making a mistake. I would say a mistake right now that as we go into next year could cost us. We need to be vocal about the reality of the market. The other thing in this market, Lawrence Yoon just posted in the last couple of weeks, see if I can get this going here, a slide that we recreated here at Keeping Current Matters. I can't get it to advance for some reason. Let me see if I can get it here. All right, there we go. This is a slide that Lawrence Yoon posted Today is nothing like 15 years ago. So you think about the lending tree survey that we just talked about, and the reality is we're in a market that's very, very different. Nothing like the housing crash. We can go through each one of these. Job cuts, 8 million in the last cycle, virtually none. If anything, that the employment market has been the anomaly of this economic slowdown, and the economy is slowing down, make no doubt about it. Total jobs, 138 million back then, 158 million today. Subprime loans were all over the place back then, and there's virtually none in the market right now. New construction during that time period, the 5 previous years, over 7.5 million new homes built, now over 4.5 million. Big difference there in the number of homes built. Inventory, this is really the biggest sort of gap, 3.8 to 4 million homes on the market back then, where we see just over 1 million homes on the market right now. You look at delinquencies and foreclosures, big gaps there that we've talked about. This is so important for a couple of reasons. One, articles like this continue to come out. The housing market, 15 years ago, the housing crash the market crashed under similar circumstances. Now, if I go back and we talk about the lending tree survey, we look at this headline, we don't have the facts, or I don't have this at my disposal. If I'm talking to somebody, then gosh, that conversation takes one of two different turns. We can take a turn to show people what's actually happening and the differences in the market today versus back then, or we don't have those answers. My encouragement to you is going to be to have these slides on your phone as we go through the next couple of weeks, because these questions are happening. These headlines are going to continue to come out as we go into the new year, and we need to have the answers. So what are the ones I would have on my phone besides this? First one, Kate talked about this last week. What are the forecasts for home prices going into next year? We certainly have those calling for appreciation, those calling for depreciation. As you look going into next year, this is going to be a question that's going to be on a lot of people's minds. Having all of this ready, we're going to stay on top of this as new forecasts come out, as they get updated by the forecaster. We're going to give those to you. Based on where you're at, based on the price point in the market that you serve, you can give the best advice to the clients that are sitting in front of you by having the forecast, having a handle on what's happening in your market. The other question that a lot of people ask themselves or think about is, okay, are we going to see this wave of foreclosures coming in? And again, don't fall prey to the curse of knowledge and say, well, just because I know that or I understand that, everybody that's not in our business does not know that. There's no doubt foreclosures are up, but still near record lows. If you look through the third quarter of this year, there were 88,000 foreclosures in this country. You compare that to 2019, the last sort of normal year before the anomaly of COVID and the moratorium on foreclosures, there were 278. If you were to play this year out and stay on the track of where we've been, probably 100 to 125,000 foreclosures, nowhere near what we saw back in 2019. And the reality is, we've talked a lot about this on the deep dive, the equity that people have today. They can go out and sell their home, pay a real estate commission, pay commission, and put a little bit of money in their pocket and sort of get past the crisis they're facing. Back in 2008, that wasn't an option. You didn't have an option to sell. The question wasn't going to be, are you going to lose money? It was, how much are you going to lose? The question today may be, you may not make as much money as you would have back in the spring, but no doubt strong appreciation over the last couple of years is benefiting sellers all over the place. But staying on top of this, having this information, and as always, I tell people this that are KCM members. If you're not a KCM member, we'd love to have you. The source to this information is in the slide notes. So imagine you're sitting there talking to someone and you're having this conversation, maybe not a full-blown conversation, saying, hey, we can connect on this next week, or let's talk about it, but I'll send you a link to this report if you want, and you can take a look at it. Now, most people probably won't, but have the confidence to be able to do that if somebody asks you a question. The other slide that we've used this entire year is the trajectory of mortgage rates. Starting from the beginning of the year to where we are right now, we've seen some relief in the last few weeks on the 30-year fixed mortgage rate, but no doubt we're coming out of a year the fastest rise in mortgage rates. We haven't seen a year where mortgage rates have doubled, but if you want to have this slide on your phone to show people the reality of the real estate market, then absolutely do that. But here's the one I would have on my phone. It's this one right here. It's rates since the middle really of November. You see it here, November 10th, and each week we've seen a little bit more relief to where we sit as of Thursday, according to Freddie Mac, 6.31% on the average 30-year fix. And even I was looking at rates this morning, seeing some rates a little bit lower than that. But no doubt over the last several weeks, we've seen this kind of step down. There's the old saying that when rates go up, they take the escalator. When they come down, they take the stairs. But as we go into next year, we're going to stay on top of this. But our job is to get out there and give perspective on this, give perspective on rates. If you need a tool to do that, on the 10th of every month, we release the monthly market report. I would encourage you to go download that, use that resource, continue to use that resource each month as you and your team stay on top of what's happening in the market. Because I think this is going to be a time as we transfer, into next year, sort of cross the line into next year, that staying equipped, staying knowledgeable about what's happening in real estate is going to be what we absolutely have to do. I think I'll kind of wrap on this quote before I go back to Jess to ask if there are any questions. Lisa Sturdivant said this: prospective buyers may be tempted to try to time rates to jump into the market when rates dip, but timing rates is difficult. No doubt. We had the quote that we used a few months back where it said it's not timing the market, it's time in the market. And certainly that is true today. So Jess, I want to pause for a second. Any questions that we have before we wrap up?
Hi, Dave. I did see just one question come through from Mike, and this might even be something that other agents can answer in the chat as well. Okay. He said, in a survey from the California Association of Realtors, 75% of sellers say it's a good time to buy, and 83% of buyers say it's a bad time to buy. Are you seeing similar disconnects between buyers and sellers throughout the country?
Yeah, I think there certainly is a lot of disconnect right now. And I think it kind of goes back to what we said. There are a lot of decisions that are being made right now based upon fear. And I think our job to get out there with the truth helps eliminate that fear. Now, the decision to sell a home, the decision to buy a home is an extremely personal one. And I think sitting down with somebody, having the facts, having a fact-based opinion about the market, we can give them the best advice. Is it the right time to buy? Is it the right time to sell based on your situation? So I certainly think that is something that's happening across the country in what we're seeing, really fear driving those decisions or lack of those decisions.
Thank you, David.
Any other questions? Yes?
Yep, I did just see one more question come through from Samara. Hopefully I'm pronouncing that correctly. What's the amount of equity that homeowners have on average right now? There was a stat this last few years that said 50% of homeowners had over 50% equity in their homes or something to that effect. So they're looking for the average. Yeah,
it's a great question. If you want to send me an email, it's David@KeepingCurrentMatters. I'll pull that slide for you. No doubt there's overwhelming equity in homes today. From a dollar amount, the average equity that First American came out with was around $300,000 is the average amount of equity, but I can give you the breakdown on the number of homes that are owned free and clear, those that have greater than 50% equity, which is termed equity rich in a home, but I don't have that exact percentage off the top of my head. But send me an email and I'll get that information to you.
Awesome. Thank you, Dave. And I don't see any other questions right now.
All right, perfect. Well, I'm going to wrap up on that. I'll spend just a minute. We're wrapping up the deep dive. If you want to stay on, you can. And I want to talk, just about really kind of where the market is at. And I think we're in a place that's very interesting right now where we're in a turn in real estate. You know, that turn started back at the beginning of this year, and it was a time where rates started to go up, and many people have watched that this year. No doubt we'll look back on this year and say it was defined by interest rates, and that caused the market to do what it's done. But no doubt we're in this turn in real estate. And I grew up in Georgia, about halfway between Atlanta and Athens, and every summer we'd go back over to South Carolina, where my dad was from, and there was a racetrack there, and started to kind of love racing and get to learn about it. And there's no doubt that for a race car driver, they make their money and they build their career in the turn. And that's exactly where we are right now in our business. You see, anybody can drive down the road doing 180 or 200 miles an hour and head down the freeway and run down that straightaway. But as soon as you come to the turn, many of us, myself included, we would panic, we'd hit the brakes, and we'd crash into the wall. But no doubt we've been in a couple of years in this business where we've been flying down the straightaway, and we're in the turn right now. But really, drivers are trained to sort of downshift, slow down, pick a line to go through the turn, and then they accelerate through that turn, which gives them the momentum, and then they hit the next straightaway full speed, and they're able to sort of come out of that turn. And that's really the skill of driving a race car. It's navigating the turn. And I would offer to you that we're in the turn right now as we head towards the spring market. It's the same thing in business, but here's the secret. It's the best leaders right now that understand that and adjust the quickest. They adjust to what's happening. They slow down, they pick their line, and then they come through the turn and they hit the gas. And that's why, as they come out of the turn, some companies end up farther ahead, really so far ahead, others can't catch them through the turn. And I can't explain this market better than that analogy right now, as we start to see, the next year happening, and what we'll see with interest rates, what we'll see with inventory, what we'll see with home prices. Clearly, we are turning out of the market of the last couple of years. But here's what I wouldn't want you to miss right now. Our business, real estate, is in a turn. And you have to master this. You have to get your team together. You can't be afraid. There are a lot of people that are going, I don't know what's going to happen. There are literally people that are wondering what's going to happen. We have KCM members, you on the deep dive, that say, I understand what's going on. And we have to pick our line, get our team together, because if we don't, we'll panic and we'll hit the wall, sort of in that analogy of driving a race car. But we can through halfway through this turn, get our plan together, get our team together, and then exit the turn full speed. And here's what I believe: over the next 3 to 6 months, as we enter into this spring market, there will be careers and businesses built during this time, because there will be people that master the turn. And my hope is, as we wrap up this year, that you'll take all of this information, all the knowledge that you have, and you'll build your plan. You'll build your team, and you'll say, this is what we need to do to master the turn going into the spring market. I think right now, the one thing that I can see is we're starting to see a little bit of relief in interest rates, and we don't have the inventory we need. As we come into this spring market, I believe if we're in a stable interest rate environment, we're going to see a lot of demand from folks all over the country. So no doubt being prepared for that is what we have to do. As we wrap up this last deep dive of the year, I want to say thank you for attending, being a part of this, and always joining us on Monday mornings as we do the deep dive. No doubt, being the educated agent in this market is the winning agent. We are grateful for you, and our hope is that as we go through the next few months, that you'll master the turn. We'll be back after the first of the year on Mondays with a deep dive, and we'll see you then. Take care.